Good afternoon, everybody. Today I'm chatting with Kai Hoffmann from Soar Financial. In today's interview, we discuss mining interest from retail investors and how volatile it has been both pre-Trump getting elected and post-Trump getting elected. We also discuss Germany and the roller coaster that they've been on when it comes to nuclear power. And Kai gives us an idea of what metals he is most enthusiastic about at this stage of the capital market cycle. All right, everybody, enjoy the interview. Kai, thanks for joining us today.
Hey, Steve, thanks for having me. Great to be back on.
So I thought maybe we could start off talking about sort of what the buzz is right now in junior mining. I had an interesting chat yesterday with Christian Easterday from Hot Chili, and he was commenting to me about Australia, which as Canadians, we hear about Australia and we always hear that the mining market is incredible. And he said it's actually quite depressing. There's a handful of names that everybody likes and they invest in, and those companies have money. And then outside of that, it's just like Canada, where it's just all and a lot of them are his friends and colleagues that he'll write checks for because he feels bad for them, trying to help keep them alive. And then he's also talking about how he took money when copper was around $5, and his shareholders gave him a lot of basically heat over it. And he's so grateful that he did because he doesn't know exactly where the copper market and capital flows could end up being in a year. Could be great, could be terrible. But I'm curious. I know you just held a conference. You go to lots of conferences. You talk to all sorts of people from the macro side, the big Peter Schiff types, all the way down to the tiny junior mining guys. What's the buzz right now? What's your read on the mining market?
It's an interesting market right now. After Beaver Creek, where we saw each other, Steve, I felt almost like euphoria in the market, and that's a weird thing to say. It wasn't euphoric, but there was excitement. Let's say it that. Like people were more optimistic. Placements were getting done. Financings were being oversubscribed, not just in the silver space, but all around, which was positive to see. It seemed like the mood picked up, and interestingly enough, maybe to throw the macro in here. It happened right after the first Fed rate cut, which was really interesting to witness because the market really sentiment and just mood completely died back in March 2022 when the Fed started raising rates, which is usually never good because it just drains the capital out of our markets, the junior mining markets, which is a higher risk market. And ideally, you just play with money that you can afford to lose. It's not really investment dollars. I almost call it hobby investing and hobby trading, maybe in our space, because it is so high risk, and very volatile, right? But that euphoria has died down now that we've seen mid-November. We've seen, when was it, November 20th or so, we've seen another Fed meeting, and Jerome Powell really stepped on the brakes. He said, oh, let's be data dependent again, despite me being Jerome Powell announcing we're going to do 2 rate cuts anyway. But now he's data dependent. And just yesterday, actually, he mentioned like, we're going to be more cautious. And that was directly reflected in the junior mining market again. Sentiment has dropped off. The mining stocks have reversed. Like even the big names have put on the brakes. I was looking at the Newmonts and the Barricks and the Agnicos. Like a lot of the gains they've really accrued over the year have, I wouldn't say evaporated, but they've been reduced. So the mood has been sobering the last couple of weeks. I think we're all in limbo, waiting to see what happens when the new president moves into the White House in DC. We'll see what it means in terms of tariffs and all of the, let's call it, for lack of a better term, maybe hot air that's coming out of the U.S. We'll see how much bite the tiger has, or whatever you want to call him. And then the market will make up its mind. Yes, we're trading still at 26.50 for gold, which is fantastic. The big miners are producing record cash flows, not record free cash flow, but record cash flows, which looks great, but it hasn't really trickled down. The other reason is the S&P is up 28%. It's holding pace with the gold price right now. They're both up about 28, 29%. So none of them has really broken out. And you brought up the conference. Like I spoke with Christian Wartzian on a panel at my conference in Frankfurt, and he says, like, Kai, what do you expect? Like none of the main markets has really broken out, neither the S&P nor gold. Why do you expect an outperformance from any of the stocks? And he's true, and he's actually right. Like, why would any of the stocks move? We've just all moved up in parallel and in tandem. And they'll look at the big names. Newmont year-to-date performance, 0. Barrick, 10% at best. Agnico around 40%. That's great, but barely outperforming. The GDX is trading below gold this year. So 22% gains versus 29%. So coming back to your question, mood? Weird. in a nutshell, quite honestly. Yes, we've seen DeGray being bought for $5 billion by Northern Star. We'll see how that trickles down. We're still waiting on a lot of trickle downs from recent acquisitions and deals. Newmont is just shedding a few assets. I think they're selling 6 assets right now. We'll see how that goes. I hear Borden is the next one off the block. We'll see who takes that. I have an inkling. I'm curious if that materializes, because that would be an interesting acquisition. I'm really looking forward to that. It could shake up the industry a little bit. But other than that, like, the buzz has evaporated, at least on the junior mic. I'm only talking
Yeah,
the junior space, smaller companies, right?
it's funny you say that, because that's been exactly our read, is that going into the election there was so much excitement, and you're right. Beaver Creek 2023 versus Beaver Creek 2024, it was super depressing at Beaver Creek 2023. The amount of companies I talked to, we got a great asset, we've done a ton of work, all we've done is execute, and nobody cares. And then 2024 came, and it was suddenly like, hey, junior mining's back. And then all of a sudden, ever since Trump got elected, there's all this tariff talk, and things are a little bit, definitely the excitement's gone.
Yeah.
Um, what's your view on the tariffs? Do you think that this is Trump just posturing, coming up with these high numbers, and then he's ultimately going to come in with smaller tariffs? Do you think he actually might do these high tariffs? Do you think that it's just basically hot air? What's your view on it?
The bark is always worse than the bite, right? I think that's the rule to live by. And I think he's done the same thing back in 2016. Like, he's threatened tariffs. And the Canadian premier or prime minister, like 24 hours after he announced, well, we're slapping 25% on anything that comes out of Canada, the prime minister jumps in his little jet and flies down to Florida to have a chat with the new president. So it's doing exactly what it is supposed to do. It's scare tactics. We'll see come January 20th, maybe 21st. Let's give the guy a day to sort of settle in and get comfy in his chair. But I think the bark is worse than the bite. When it comes to that, it's really to get people to the negotiating table. He uses illegal immigration and fentanyl, or the truck problem, as the excuse to sort of threaten those tariffs. I think they're there to renegotiate other deals on the economic side as well, coming out of Mexico in particular. I'm not sure why he's really targeting Canada, because he's said openly, like, we're building that Keystone pipeline. So he's actually supporting Canadian business and the oil trade and the oil and gas industry. So it doesn't really make too much sense. On the illegal immigration side, I've yet to see anybody immigrate illegally from Canada into the U.S. I think it's more of a southern problem. But we'll have to see how it plays out, quite honestly. If the rule book, or if it's anything like we've seen in 2016 or 2017 when he announced tariffs on solar panels and washing machines, like, washing machine manufacturers came into the U.S. and started producing washing machines in the U.S. So it might help. Inflation is another one that we should be looking. If he really slaps 25 or 100% on certain goods, like, or with like he's threatened the BRICS, like, if you come up with your own currency, we'll tariff everything with 100%. The dollar store will be the $2 store. All right. So we'll have to think about what the ramifications out there are, and it's all positive for gold in that regard.
That's already what it's like in Canada. We don't really, we still have dollar stores, but there's
They're
not much
dollar and
in there
quarter
that's a
store
dollar.
now, or $1.50 store
Yeah.
these days, I think, right?
Yeah. Um, so something I wanted to ask you about is, I know you live in Germany, and we read a bunch of headlines about what it's like in Germany right now on social media. I'm curious from your perspective how much things have changed these last couple of years in Europe and Germany specific, in terms of what happened with Russia and Ukraine, and the pipeline, and obviously there's been an economic slowdown since 2021 globally, from my view. What's it like right now in Europe?
It's awful. Quite honestly, it's awful. Officially, we're in a recession for the last 2 years in Germany. Economic outlook, very grim. 0.1% growth next year has been forecasted. Data just came out this morning. Energy prices are the second highest in Europe. I'm trying to figure out why the UK is more expensive and how they're managing to beat us. That's an interesting one. But ever since the Ukraine war broke out with Russia, like, we've been on the hook for higher energy costs. That's been absolutely detrimental to what we're doing. Driving an EV, like, was always advertised, oh, this is free, or like a lot cheaper than driving a gas car. It's cleaner. Like, our energy costs are so high. It's like you're driving a 10-liter gasoline car. it doesn't really make a difference anymore, right? Like we're paying 35 to 37 cents a kilowatt hour easily over here, compared to the US. Or we're a good friend of mine, you pay 7 cents in Utah, for example. Like how can you be competitive? Car manufacturers are feeling it. Nobody's buying any EVs right now because all the subsidies have disappeared. So they're sitting on massive overproduction. I see photos on social media of full car lots, like literally full. There's millions and millions of dollars worth of cars just sitting around. Volkswagen has to lay 30,000 people off. They're about to close factories, which they barely had to do in the last 150 years, because it was all just misguided. Some of them, like politicians, simply lied about the consequences of nuclear energy, and that's coming out on a daily basis. Can't even believe that we're trying to get our economic minister to run again next year, or when we have the election. So it's all falling apart right now. The narrative is getting undone, and we'll see what the elections look like.
So I want to ask you about that because obviously I'm sitting here in Canada, and my social media feeds are tilted towards mining investors and all the usual macro suspects, and we often read stuff about what happened in Germany with nuclear power and this move away from it. Now, obviously, you're chatting with friends and family and colleagues in Germany, so you've got a firsthand perspective. What exactly happened with nuclear power in Germany, and what's the viewpoint right now of most Germans you talk to?
It's bifurcated. We just had a neighborhood gathering the other day, just for some drinks, and because we've all lived in the same neighborhood for 10 years now, we all moved in at the same time. And one of the guys, which is interesting, I like hearing different perspectives. Is like, oh, we got to continue. Like it's the right thing to do. We got to continue with what we've been doing, meaning like nuclear, phasing out nuclear, and just remaining with renewable energies. Personally, I don't agree with that because nuclear is one of the greenest energies you can have out there. Storage, yes, is still a problem, hasn't been solved, but there's ways to do it. And it is a bit bifurcated. I think the Green Party, when they came into power, tried to make do on a promise that they gave in the 70s, personally, trying to get rid of nuclear. And to know that they're in power, they got rid of nuclear. Our energy cost exploded. We're using way too much coal. It's interesting if you look at the CO2 statistics of per kilowatt or megawatt hour. I think it's megawatt hour produced. We're producing about 25%. No, sorry, not 25. 25 times the amount of CO2 that France is producing for power. Please tell me if that was the motivation of the Green Party and how that really helps becoming CO2 neutral and climate neutral. It does not make any sense. We'd shut off the cleanest power by burning coal. So yeah, no, it's a bit bifurcated in the general public when it comes to that.
So Kai, yesterday I was having a conversation with a friend about what about this idea of if governments are doing stuff that is, I'll use the word hairy, sketchy, crony capitalism, or if it's just incompetence. And when it comes to Germany and nuclear power, I'm curious from your view if if there was some sort of conspiracy theory here or something that shouldn't have been happening against the will of the people, or if this was just government incompetence.
I think it's a mix of everything. There are certain politicians that are definitely incompetent. Like, I don't dare say dumb, but incompetent. They're obviously smart enough to get to have gotten where they are right now. So they got a certain competence, but maybe not in the field they're working in, right? Um, so when it comes to that, like conspiracy theories, yes and no. Like I think it is insecurities that are easily exploited. When you don't know anything about a certain topic, and somebody who portrays themselves as an expert comes to you and tells you all about it, you might gobble it up, right? So it comes down to incompetence, stupidity, and what do you call it? Favoritism, no, being taken advantage of as well. And I think that is happening because our politicians are definitely not smart enough these days to keep up. Our economic minister used to be a children's book author as well. So maybe there's certain competencies missing. Let's just say that. Like maybe they're surrounded by the wrong people. And that's what we're seeing. Those are the consequences we're paying right now. So they're probably easily influenced by anybody who comes to them with a reasonable opinion that they might even believe in.
So let's turn the conversation to metals and commodities for a second here. You're obviously a bright guy, reading lots of stuff, investing dollars, talking to all sorts of management teams at all sorts of conferences. What's the commodity that you're the most excited about right now?
It's still gold right now. Easily, the most money flows into gold. About 60-ish% of the capital raised goes into gold. It's probably a little more now. I have to rerun the numbers. Last time I looked was midsummer, I think. Copper was
So
always interesting, but
let me follow up on that. You said 60% of the capital raise goes into gold. What does that mean?
so into the gold mining stocks, gold, it's
Oh, okay.
exploration companies that are looking for gold, like that's
Okay.
their main commodity,
Okay. Got
right?
it. Got it. Got it.
The main commodity they're looking for. So that's of interest. Gold in general, I think, is the most prospective, the most interesting, the most widely owned. Silver second, but there's not enough silver companies to look at. So I still look at them. I still like the silver space. And then copper's probably third. It's calmed down a little bit. Recession fears globally are really hampering sentiment when it comes to copper. Some of the stocks have done tremendously well, like an Aldebaran or a few others that are in the copper space have done really well. But overall, like the copper price hasn't really broken out. Global recession fears are still looming. So it's like I'm a little less excited about deploying capital in the copper space right now, only because I see maybe a short to midterm dip ahead. I think we're all understanding that if we want to electrify the world and go CO2 neutral, we need a lot more copper, but it hasn't really evaporated because I think the recession fears are looming large over the copper space. So gold, silver, copper are the three ones I focus on. The battery metals I try to shy away from. There's too much outside influence from like China and other players, primarily China. When I look at lithium pricing, for example, that is really weird. Trying to understand that doesn't make a whole lot of sense. We've crashed hard from 70,000 down to I don't even know where we are today, $15,000-$16,000 a ton or whatever it is. So that's a weird market because it's influenced and controlled by external players. Just look at germanium and gallium, export ban now. So I'm trying to stay away from those. They're too niche. So coming back to your question, gold, silver, copper are the three metals I'm most excited about.
What's your process like when you are looking at a mining company, whether you're putting investment dollars in or you're taking them on as an advertising client for the gold newsletter? What are the things you think about to say, I want to move forward with this company, or I won't go near this company?
Two very different things. If I invest personally, the filter is different than when they pay us. Quite honestly, when we talk to them about like the projects and the company on the gold newsletter, doesn't necessarily mean we're going to invest in them. The one thing we do make sure is that it's not a scam. So we check capital structure, who owns the cheap shares, like what does it look like, how are they trading, how many marketing contracts do they have. So those are the things we make sure. We're trying to be a first pass filter, but we cannot like filter for everybody or everything. The due diligence is a bit more rigid when we're investing or they become full-time clients of ours. Then we dive a lot deeper. We take a lot closer look at management. Ideally, we would have had broken bread with the team, might have had a few beers with them because it's a very personal business. And if I can't trust the jockey, the horse doesn't matter, quite honestly. If the horse can be the fastest horse, but if the jockey is, I don't know, for lack of a better term, maybe a drunk or whatever it is, it doesn't make any sense. So that's where we start. Of course, site visits are another thing we try to do a lot of. I usually do like 10 or 15 a year, depends on where they are and what the project is, of course, because that's where you learn the most. You get to exchange your ideas with other peers that might be on the site visit with you. And then, those are the most important ones: capital structure, management, commodity, and then project location to a degree as well. But those are, given.
Do you follow Bitcoin much? Or do you think that it's stolen gold's thunder at all? What's your view on Bitcoin?
I don't mind it personally. I understand that we're in a digital world and people like digital things. People referring to gold, Bitcoin as digital gold. Sure, fine. I still have a bit of a trust issue personally with it. Like it came out of nowhere. Where will it go? And who's really controlling it? That's the one thing that makes me a little nervous. But I understand it. Like I understand the mechanism behind it. You can easily move it around. I would be personally a little worried if there's a massive power outage. How can you use it? So I keep going back to gold and silver personally. But I get it. I get the hype. If the U.S. really wants to set up a Fort Knox for Bitcoin, I'm not sure who's going to carry that USB stick in their pocket, but then sure, why not? Gold has been a reserve currency for thousands of years. So I understand, like when the U.S. starts to say, "Oh, we're going to buy some gold," that it might not move, although it already has over 8,000 tons, so it won't revalue gold at that point. But if the U.S. all of a sudden says we're buying Bitcoin to put it in a strategic reserve, then of course that moves the markets because Bitcoin hasn't moved at all like gold has over 5,000 years. So like, I'm not recommending Bitcoin, but I understand the move behind it and understand the euphoria. I hope it's not a hard landing. It's going to be extremely volatile, in my opinion. We just broken through 100,000. So I look over there a little bit with envy, not jealousy, but envy maybe a little bit. I'm not sure. I think envy is the lighter, the nicer one, right? Over jealousy. So
Yeah.
maybe a little envy over there in terms of performance. But the question is now, are they really taking away the gold investors? And I've had discussions with friends about that. Is the young crowd ever coming back into the gold space? Is gold ever going to be sexy enough for investors to make money? Again, that's the big question, and we really have to work hard on that. And I have no answer how the industry can address that at this point. How can we make mining sexy again and interesting again? Versus Bitcoin, which is just stealing everybody's thunder. The performance is insane. There's meme coins, whatever it is, that people are making a killing on that we just cannot compete with. We've had it. We've had our run maybe in 2008, 2009, or even 2010. Probably more 2010, sorry. It's not our time yet. It'll come. We're at 2,700 or 2,650 gold. Once the penny drops and maybe the bucket fall, like the what is it? The bottom of the barrel falls out in the S&P, hopefully at some point. Hopefully, that means there's going to be some hardship. But then the mining stocks will be on vogue again. And it's cyclical. It'll come back. But there's a bit of envy over there.
Well, Kai, thanks very much for hopping on here today. It's always a pleasure when we get to chat. If our audience wants more of your commentary, where do they go to?
Yeah, either the YouTube channel, youtube.com/Soar Financial, that you can find us over there. I'm on X as well, at JR Mining Guy or Junior Mining Guy, and LinkedIn as well. Just type in Kai Hoffmann. You should find me. If you want to add me, sure. Just add a little note in case you're working in a different industry or your title under your name says something that doesn't make any sense to me coming from the mining space. Just add a little note that you might have seen the interview or so, and I'll happily add you to the network. It'd be great to chat.
Awesome. Well, Kai, thanks very much for hopping on here. Some great insights, and let's do this again sometime.
Thanks for having me on, Steve. It's great to chat.
All right, everybody. Thank you for watching. If you enjoyed this interview, please smash that like button, subscribe, and ring that notification bell. Guys, also let us know what you think in the comment section. Thanks, everyone.